Sanjiv, hi, good morning. Good to have you on the show as always. Sanjiv, I guess all eyes on HDFC Bank, and nothing to say that the stock is going to higher. No dhamaka in the earnings. What do you think the stock is going to do?
Yeah, good morning, Aisha. Well, HDFC Bank was the star which pulled out of the throes of 21,800 or 21,777. And I think that numbers were in line. Now, you cannot make a spectacular case. They've clearly indicated the CDR ratio is on its way down and it will take a couple of quarters. What you have to give them credit for is that they are adjusting one of the largest mortgage lenders in the book, and it takes a couple of quarters. So I think like you said, the stock will do maybe nothing much. It's not going to see much downside because they have indicated that we know deposits are on the weaker side. It's across the board. So as the liability franchise improves, as we see more color on the NIMs expanding because they've not raised rates just to protect their margins. So I think inline numbers, inline performance, that's what the idea is. If you get it on a decline, it's a buy for me.
Okay, fair enough. That's the view coming on HDFC Bank, a buy if there is a decline. Sanjiv, morning. Let's also get in your thoughts then on Reliance Industries. Of course, we were expecting the numbers to coincide with Elon Musk's visit, which has now been postponed. So maybe some announcement on that front. But overall, what are you expecting from numbers?
Yeah, good morning, Awan. For me, today's day belongs only to Idea, IDEA. This FPO is your only opportunity to get this stock at 11. This is going to be the stock of the year. 1 year target 25. Look, my people are misreading the debt and everything overblown. There is just an outstanding of something like 3,800 crores which they have towards bank. Majority of the debt is being converted into equity on interest because of government taking stake. And the government is also very gung-ho. They are in the way of raising funds which is going to give capital for 5G and the others. For me, the stock of the day, stock of the month, stock of the year and the next 2 years is Idea Voda. You cannot make money. So put all your money at 11 rupees. You cannot but be successful. That is my top pick. To Reliance, I think we will see numbers which will be reasonably good. ARPUs are going to see an upside. By the way, Voda's ARPU at 142 in the last quarter, which I think over the next 2 quarters can even go up to 180, 190, which will again be a cushion. We will watch for Jio's earnings. We will watch for the ARPU, which is very positive. And thirdly, the retail energy arms, because if you see the numbers from SW Solar, largely by Reliance Energy, then I think some of parts we could be pleasantly confident of Reliance outperformance. However, the problem is going to be more on the OTC side, where again you've seen a fluctuation in oil prices, which can be see some on the margin. But overall, I would say inline numbers.
Okay, inline numbers there for Reliance. That's what one can anticipate. And yes, Idea Vodafone, that's going to be the stock of the year, according to Sanjiv Bhasin. Sanjiv, what else within mid and small caps are you recommending right now for our viewers to buy?
So, Aisha, firstly, investor generally miss the woods for the trees. Firstly, put all your effort in Idea. You're getting an opportunity of a large IPO where development will be more or less, in a very good ratio. So, Idea. Aside from that, I think silver prices are headed. We've been very bullish on Vedanta, and by the grace of God, that has been a huge performer. I see 450 coming on Vedanta. I'm very bullish on Maruti, where I think 13,500 would come by the earnings. And lastly, India Bull Real Estate, which for me will again be the stock of the year, given that the inventory they had, and now with the promoters putting in, very marquee names, putting in almost 4,000 crore commitment, you cannot but have real estate be the theme. This stock underperform in a big way. I think here the market cap discount is very, very substantial, and if only thing I can see a doubling of this stock in this year itself.
Okay, there you have it. That's very strong conviction coming in for some of Sanjeev's picks. But get in a take then on the charts, and Kunal would like to get in your thoughts. Bajaj Finance scaled up on Friday's trading day, and then some of the automakers like an M&M or a Maruti Suzuki as well held up. What do the charts indicate?
Well, yeah, very attractive charts. For example, Bajaj Finance, I think the stock had been falling for the last 4 or 5 days prior to this, up move on Friday. And I think the stock corrected from 6,250, 300 levels towards a point when the stock was on touching distance of break 6,800 mark. So after a 350 odd point correction, this is a very good, recovery candlestick for Bajaj Finance. And this could probably indicate that what we saw in the last 4 or 5 days of the price correction could probably be termed as a false move for the stock on the downside, and the stock should break out the uptrend. So I would believe that the stock looks very attractive, and I think even if it opens with a mild bit of a gap up, I think traders should look at a buy, especially from the traditional playwood. Look out for higher targets of 7,500 to even potentially 7,800 plus mark gradually over the next few weeks. For automakers, I think the move has been very stable and strong. So when you look at the charts, for example, the likes of M&M, Maruti, you even add to that the likes of Escorts, etc. These stocks have been doing reasonably well. There was a very mild degree of volatility for these stocks, just a 5% odd correction for both of these names over the last, I think, few weeks. And the recovery for these stocks has been, on the first side. And you've seen the stocks coming back towards or retesting previous swing highs. So both the charts are very attractive. Maruti is something which I would probably recommend from current levels.
Okay, there you have it. That's the view coming in from Kunal on some of those stocks in trade. Meantime, let's get in your views, Sanjeev, on the PNGR reviewing the grid tariff. The likes of a GSPL will be in the spotlight. How are you reading into the news?
Well, that's the risk you have of regulatory, authorities playing up and down on some of these things, which are very, very dependent on the tariffs and the rates. And this leaves a little bit of a dampener foreigners play, because if you invest largely on the basis that there is going to be consistency in a large number of regulatory partners, this can be a spoke in the spanner. Hence, I think there will be a little bit of a volatile session maybe today, and that then we will see what the outcome is, because the impact will clearly be on the numbers. I still think GAIL is one of the best picks we have there, and we think GAIL can be a outperformer. However, as a caveat, GAIL has been our pick from 125 30 at 200. Risk reward is in not in favor, but I think GAIL can still be a relative outperformer. On the others we have an avoid.
Right, okay. Some news from the pharma universe as well. And Lupin and Zydus Life launched a drug in the US that treats overactive bladder. Let me take it across to Shrishti and find out more about this announcement and what really does it mean for both Zydus as well as Lupin.
Well, yes, Lupin and Zydus both are in the focus because both the companies have launched a drug in the US, which is believed to be a big opportunity drug. They have launched Mirabegron extended release tablets in the US, which is a drug used for the treatment of overactive bladder, and it is a generic equivalent of a drug produced by Astellas Pharma Global Development. Now, Lupin and Zydus, for now, they have launched a drug of a strength 25 milligrams. Both the companies do have the approval of 50 milligrams as well, which is to be launched in the times ahead. Now, just to give you a perspective, Lupin does say that this 25 milligrams of strength has an estimated sales of $1,019 million in the US, and combined sales of 25 as well as 50 milligrams is at $0.42 billion in the US. So it is indeed a big opportunity size drug, and not just Lupin and Zydus. In the time we can see more competition because Aurobindo Pharma too has an tentative approval for 50 milligram. Now let's talk about the expected revenue from these drugs. Now Antic believes that for Lupin, the company is expected to generate around 500 crores in FY25. Other than that, they're likely to remain the Lupin's biggest loss for FY25. Now Elara is of the view that this particular drug could help generate Lupin around 420 crores of revenue only for this 25 milligram strength. But in the time ahead, how is the competition panning out to be? This is something that they will be watching out for, because for now the analysts believe that Lupin has enjoyed FTF status with 180 days of exclusivity in the product along with Zydus Life. So both the companies have launched, and it is indeed a positive news. Back to you.
All right, thanks very much for that. Meantime, let's get in your thoughts, Sanjeev, as to how you read into some of the IT quarterly performances, which was pretty much in line. How have you, characterized the quarter gone?
Well, we knew that this quarter is going to be seen no headline, glamour, and Wipro has come with very steady numbers. Look, don't weigh Wipro on a quarterly basis because there has been ups and downs and they've been in line. But I think Wipro for me is the best large cap pick we have. Persistent numbers are very strong, and as a contrarian, we've had a sit being done on HCL Tech and LTIM. I think LTIM Mindtree is going to be the star for, given that the valuation comfort because of the attrition of some of the large cap people is being made out too much. The LTIM numbers will be out on 24. That could be a real surprise item on the upside. So my money is on LTIM, HCL Tech. As a disclosure, Wipro is, along with TCS, one of our top picks in our portfolio. We continue to be very bullish on TCS being the relatively outperformer, but Wipro being the best play over here on a price performance, which we think can even hit 700 rupees in the space of 1 year.
In the meantime, Zomato has now hiked its platform fee by a good 25%, which equates to about 5 rupees per order. But Sanjiv, 188, what's the call on the stock?
So Aisha, it's almost more than a tripler for us, pretty. But I think there will be volatility here. It's a high of almost 200. You can see some more plateauing, some more consolidation. But all dips are buying opportunities because it's only consolidating in market share. As a feedback, let me also tell you, my son's business is now picking up. And it's not because of Zomato. It's actually because of Swiggy. Swiggy is doing excellent business. And he's saying it's more competitive. It is giving more order flow. And he's starting to make little money. So I would say space is looking very, very good. Watch out for the Swiggy IPO. It could be a blockbuster. Yes. Good morning, Avan. Good morning, Aisha. Well, I was thumping the table that please do subscribe, and it 0.5 when we came in the morning, got 7 times. I think this is the best pick of the month, year, and for the next 2 years. So if you are looking at a steady business which can give you 100% and more returns, that's Vodafone Idea. The capex will add to the money rate will add to the capex which has been missing. And look at ARPUs, 142 against Jio's 182. I'm looking at ARPUs expanding to 200, which will mean a 42% EBITDA will now go in actual profits, because servicing of debt will also become neutralized. I think this is going to be one of the stars of the year, and it must be in your portfolio. So definitely a thumbs up from my side. And I think this could be like I said, the stock of the month, year, and maybe the next 2 years.
Okay. Sanjiv, hi, morning. Wondering whether Tejas Networks was on your list at all or not. That huge spike ahead of the numbers yesterday itself before closing on the stock. I think it shot up about 18%. And what a turnaround quarter it's been for the company.
Good morning. Yes, Aisha, Tejas Network is one of our much, stock which we got in at much lower level. This is when the whole game plan for the acquisition and growth in, your whole tech was expanding. And I think that the time Tejas Network was very, very attractive price. It just needed the right fillip as a capital or an infusion of a proper promoter. And that has played out brilliantly. I cannot this stock to 1,000 rupees, but 1,000 rupees is definitely coming. In the wireless network, I think this is going to be unquestionably the biggest play. So as a disclosure, we have it from much lower levels. We don't intend to sell, given that it will be difficult because of the low flow equity to really get into these type of stocks, even if there is a correction after results. But I think large part of the positives are built in. We have to wait for the results to look further on the game plan going ahead.
Sanjiv, what about Reliance though? While OTC has managed to offset the weak retail and Jio numbers, which have been largely in line, but it's not a marker set which is going to really move the the stock up.
Well, yes and no. This has been one of the biggest outperformers as far as the index goes. It has taken the double weight of HDFC Bank's underperformance, and now the next game plan will be the individual listing of Jio, which is going to be very, very big value unlock. Now, Aisha, you cannot weigh such a big company's numbers, which has a turnover of more than 1,20,000 crore, differently in different sectors. Couple will outperform, couple will not. I think the ARPUs at 180 were very, very steady and strong. Those are looking higher. I also think the OTC business is now, gone through that cycle of China destocking or inventory, and specialty chemical particularly looking very, very good. So if anything, OTC can be a good performer, and retail will be in line because their expansion of new outlets is going to eat into the margins for the time being. But I think all businesses are doing well. Also, kindly note that their new energy business is starting to show a lot of traction, and I think that will be the real, icing on the cake in the coming quarters. The stock may not do much in the next few days because of lot of the part of the news built in, but over a period of time, I think Reliance end of the year can be closer to 3,500.
Okay, fair enough. That's the view coming in on some of the interesting makers as well that Sanjiv is tracking. In the meantime, let's also check in on what the brokerage calls are as well. And apart from Reliance Industries, of course, which is dominating the brokerage radar, there's a view on Natco Pharma. Investec believes that the company has the ability to generate significant EBITDA for the next few years after a bit of a lull. And there's also Persistent System, where Nomura believes that growth is resilient and deal wins have moderated in the quarter gone by. Let's get your thoughts then, Sanjiv, on Natco Pharma.
Well, this has been a star performer. Pharma was had a sharp downturn after the effect of COVID played out, but I think some of the generic and local producers have exceedingly well. I think Natco Pharma still has room on the side. We will wait for numbers, but the main thing for them would be how fast they can improve their margins against their relative generic costs of R&D. That would be the main key. But I think Pharma is in a very sweet spot. Over here, Lupin continues to be our big bet. 700 has become 1600. We think this is on for 2,500. This quarter results of Lupin may be the best we've seen in the last 2 years. As a disclosure, Lupin and Dr. Reddy are two of our topics.
Like Dr. Reddy and Lupin, is there anything specific which could be a trigger in the short term? Because for Pharma, it's always about getting the trigger right.
So I think, Nikunj, the change in environment in the US where generic pricing is getting more predominance, some of the new product launches, and locally the business expanding. Also, if you see the CIF where Dr. Reddy has been a big play, those there over the pricing power is back, and that could be the other. Plus, Pharma becomes a very good proxy to a weak rupee, because if you see IT has been, there's been debate on AI and so on. Whereas Pharma and contract Pharma particularly, I think is a very, very sweet business. This is what IT was 20 years back. It became a mainstay. Pharma, particularly the contract farming, is here to stay for the many, many years, which is there. And I think that, select stocks, you can add a DVs on, we are waiting for the results because they underperform. But some of these plays can be very, very strong in the slightly longer term.
Okay, fair enough. That's the take coming in on some of those stocks within the entire pharma basket. Meantime, Sanjiv, given that we're talking about this big travel boom, yesterday Clear Trip was with us saying that the demand is like never before, hotel prices going up, airfares, stocks related to this, what is it you'd look at?
So, Aman, last weekend, I was in Vietnam. First time I went there. And I can tell you, hotels were chock-a-block. The airlines were chock-a-block. Now, it was an offsite, so Indigo was, chock-a-block, and you name it. So we flew VietJet, but I think this is something where Indians are dominating the scene. I did not go and visit places and check the underlying on how many destination weddings are taking place. And as no surprise, India is the top destination wedding people who are subscribing to Vietnam and places like that. That is just a brief on what it is. That means hotels, tariffs, airlines, the whole, biocenter around that is going to be expanding. So do your winners, pick and choose your winners. I still think Indigo, Indian Hotel and Ashok Leland as a conduit to the bus market, which is expanding very fast, could be outperformers. However, these have run up quite a bit. Ashok Leland still becomes one of my top plays as far as the bus market, which is 53% market share, and the expansion of the airlines.
Sanjiv, hi, good morning. What appetite for Vodafone FPO, Sanjeev? And you've got conviction on this stock for not just now, for a long while now, and even Bharti participating in this move.
Yes, good morning, Aisha, and well and truly on our way to an expiry of 22,500, which last Wednesday looked very, very distant. Voda Idea is no longer the ugly duckling. It has become a sparkling new swan, and the infusion is going to see the AV group companies go through the roof. And now the valuation discount is actually coming up. And that is why, I would now give you my top pick for this year again after Voda Idea as a group company, ABFRL. I think we are headed for much better times. As you know, the fashion brigade is playing out to the hilt. You can't have a market cap of 25,000 crore for ABFRL versus a 1.5 lakh on Trent. And I think that valuation core is now being discounted. For me, the stock in the near term, in the medium term, and in the longer term is going to be ABFRL after Vodafone.
Of course, today you've got Axis Bank, which is due to deliver its numbers as well. Sanjeev, what is it that you make of the private banking space right now? Because, start of the year, everyone was very gung-ho about private banks making a comeback, while HDFC Bank definitely has rebound from that, 1360 thereabout lows. But again, the numbers have failed to enthuse the street, and I don't know what to expect from Axis today.
Yeah, Aisha, just to come to Axis, before that, I'll give you a point that you yourself have highlighted Indus Tower sale, stake sale of Idea of Voda into, which can again infuse more capital into, the parent company. That, along with the government being fully backing Voda Idea, makes it a very, very strong entity for the next, maybe this year and beyond. And then ARPUs and others will catch up. I think Voda Idea and the group companies are looking in the best shape ever, and capital is now going to be the actually icing on the cake. On Axis, I think it will be very, very strong numbers, given that the City acquisition has played out well, and they had to do a couple of adjustments for that as one-offs. This quarter should be strong on the NIMs, NAM, and the net interest income. See, rising yields and higher rates have also seen higher credit offtake. And I think that the private banks are not compromised as far as reducing, their liability franchise or raising rates on the borrowing side. And that has played out well. HDFC has been a standout as far as maintaining that. It will take a couple of more quarters for it to balance out the book of the mortgage company. But that's expected given that the market cap is such a big thing. It will not take time. I still think ICICI will be the star, followed by Axis, and my dark horse play here is IDFC First Bank. Watch out for the results over there. They could be very, very strong. Also, another one of my small picks has been DCB Bank. There's a big dividend coming along with capital infusion by the promoters. These 3-4 stocks could be good performers from here. You rightly pointed out, actually, PSUs have taken the cake as far as stock outperformance, but I think now it merits to look at the large cap private banks where results will be very, very key going forward.
I wanted to get in your thoughts then as to what the outlook is, Sanjeev, when it comes to the latest news reports within the entire telecom space. Of course, news has been floating on this for quite some time. So the latest ET report indicates that Bharti Airtel is in talks to buy Vodafone's 21% stake in Indus Stars, and they may get a controlling interest as well.
Well, Avan, as a disclosure, that 210 was somewhere where we put out a big buy report on Indus based on the quarterly results, based on their provisioning which they had done for Vodafone, and where the write back came, because any process of raising funds for Vodafone was a win-win for Indus Tower. I still think it's an excellent model which is played out on a market cap of 99,000. They have a cash of 11,000, 12,000 crore. This company was sitting very, very cheap at those prices. Yes, now with Bharti taking stake, it will be a win-win for both. I think Bharti consolidates, becomes the largest shareholder. It gives it more, power of holding the largest network of towers. Secondly, for Vodafone PLC, they can now actually put in that money fresh into Vodafone, given that they've been able to get such a super response. So I think in the end, it's a win-win for both. The pricing will be a little bit difficult because Indus Tower has been a star outperformer. We think that this stock can be a very, very big play given the change of constituents, and then one person getting full control will be even more value added to that. But in all, I would say it's a win-win for Vodafone Idea and the group companies of AB Birla.
Okay, fair enough. That's the view coming in on those telecom names. Meantime, what's the outlook when it comes to Cipla? Pretty positive brokerage view. They have got Investec maintaining a buy, and they believe that there is a possibility of upgrades down the line for FY 25-26. Cipla, and if we had to extend it, Sanjiv, to some of the other pharma majors?
So, Avan, Lupin, Dr. Reddy, Cipla have been our top picks. And, Cipla, purely people missed what's the action of Seriflow as far as Europe goes. Their brand over there has taken off like how. And I think they are gaining more and more market share because that is where the brand value has really encashed. And some of parts, it is arguably at a cheaper valuation than most of the other large caps. So we continue to think the decline should be a buy. But the actual buy was when it came to 950 for couple of FIs, a couple of observations by the FDA, and that is when it was a real screaming buy, below 1,000. The stock has been a very, very steady performer. I don't rule out 1,500 coming in this, but yes, it is a core portfolio stock. But our topic continues to be Lupin, which we think can give you 50% upside, and Dr. Reddy is the second line, with Cipla being the third.
Sanjiv, we were just anticipating, Nikunj and I, whether, this is turning out to be that curvature moment like we saw just coming out of COVID, or in fact when N. Chandra actually took over at the Tata Group. Is the same kind of happening with the AB Group as well? We were marking the stock performances, and Vodafone, of course, is something that we've already talked about. But from the March 19 lows, Century Textiles is up 37%. AB Capital has given a 28% return. AB Fashions is up 28%. Hindalco up 15%. Grasim, Ultratech have all given decent returns. Maybe not as much Ultratech. But, for a erstwhile only commodity conglomerate, they've expanded quite a fair bit, and very positive news flow as well off late, of, value unlocking clearly.
Correct, Aisha, and I am fully with you on your assessment. Superb work done by you. And Nukim, this is the unlocking for Aditya Birla Capital, which was supposed to be a pure cement, aluminium play, and on largest market share as far as Ultratech, Grasim as far as BSF. Look at how AB Capital has come back. Look at how AB FRL. Just see the market discount. 25,000 crore market cap on brands like Allen Solly, Louis Philippe, Pantaloon, Peter England, American Eagle, Van, you name it and it's there. And you'll have a trend on the other side, given the pedigree of the Tatas. I'm not taking a full case, but at 1.5 lakh, and this at 25,000, there is a vast discount. Given that this capital infusion is going to put more and more strength in the business, their marketing, and they have already done a couple of good acquisitions. I think ABFRL is my stock for the year after Vodafone. And we, as a disclosure, we own both of those. We think these are going to be the stocks for watching out because the businesses are unique. It is, and the advent of aspiration to rise from the small tier to the next tier, as far as apparels go, has no comparison. Apparels is also like a personal choice, and ABFRL caters to all type of needs, from the lower end to the higher end in the brands which they have. This stock is ready to 350 and maybe more over this year. But I definitely think you should be invested in this. As a disclosure, both of these and AB Capital are three of the stocks. You should also watch out for ABSL AMC. That hit a 52-week high yesterday.
Sanjiv, let's get in your take on Kotak Bank with this cease and desist notice by the Reserve Bank for issue of fresh credit cards. Given the fact that it took HDFC Bank 15 plus months to clear a similar issue, it's going to be a long drawn process for Kotak Bank as well. What do shareholders do?
Yes, good morning, Avan. Like you've seen, RBI has been very, very stringent on a lot of things and observations, and it has corrected past problems or past deficiencies. I think it's a very big positive in the sense that at least it brings to the fore that what was the lack of IT and so on. But I think given that Kotak has anyway been an underperformer, in the medium term, I think it will slightly underperform the Bank Nifty. But over a period of time, like HDFC bounce back, see, Kotak has arguably the best asset quality in the industry, and they have never sacrificed their NIMs for any short-term issues. So I think they will get back with a vengeance. And if you are a long-term investor, then this is a very good time to do a sip in this stock, because the volatility will give you the price performance. So I think overall it may not have major impact on the earnings or the long-term visibility.
Okay, not a long-term impact on the earnings visibility on the stock, but what's the expectation when it comes to Bajaj Finance in terms of their quarterly numbers? What would you like to hear?
So Bajaj Finance has been all over the place. It left a sour taste when it did that QIP at a premium, despite the next day getting, a lot of flack from the governor, regulator over, issues of non-compliance on the NBFC side. We will closely watch out, though I think that pre-operating profits before provisioning will be very, very high, given that yields have been strong for them and their liability franchise has played out well. However, we have to see the future guidance, because there is a lot of competition playing on, and now with banks full-fledged, into this on the PSU side, there can be dilution of AUM for them over a period of time. So I think I will watch out for the book which goes forward, the return on equity, but I would say inline numbers.
Day, Vodafone, you've been a fan of this one. The FPO shares are going to hit the market. What is it that we can anticipate?
Well, if you missed out on the allotment, which I think 90% people did, because if you applied below 2 lakh, you got the good allotment, but the large caps, at least in large category, got very little. And I think the left out feeling is going to be huge. They got oversubscribed more than 8 times. I think it's a buy. So whenever you get it at a discount because of the arbitrage or because of some profit booking, I think this is the best pick of the year. So please, look and see where you are comfortable with buying it. But maybe a little bit premium to the issue price should be a very, very good harbinger if you are looking at doubling in the next year. I think Vodafone has set the cat amongst the pigeons. The AB Birla Group is up and roaring. We gave you ABFRL, AB Capital. ABFRL is now arguably looking to scale that 350 mark. It's at a new high. So I'm very, very confident on Vodafone and would suggest buys as you get closer to that a little volatility because of the arbitrage or the people who want to book out.
Sanjiv, good morning. Sanjiv, start of the May series yesterday was a good short covering. We were just discussing that May will actually be a confluence of a lot of factors. Progress of monsoon, progress of polls, progress of earnings season, and now with US data. So how do you think May and sell in May, go away will work, or just like last time round, it won't work this time as well?
Yeah, good morning, Ajay.
Good morning.
You've been on a nice holiday in April. I suggest you take another break on May, because yes, sell in May and go on a holiday is very much on the card. Markets have ignored all news and are relentless in their rally to upside. And now all good news, including 450 seats on the poll front, are also getting priced in. So I would advise a lot of caution, particularly in stock sectors which are not aligning with the growth which has come. So be a little cautious here. Take some money off the table. Leave the last 200 points on the upside. The US is looking very, very precarious. And either way, there is no talk of a higher capital gain tax and so on. And this all volatility is not for the faint-hearted. We try and keep most of our clients hedged. If you recall, Ajay, 22,800 went to 21,700, 800 in a week and back to that. So we got that correct. Stock specific, you have to be more aligned. But on the index, I see no more, not much upside. So my suggestion is that I think for the faint-hearted or the larger term retail, keep your SIP going, but take some money off the table wherever you are seeing leverage.
If you like this video, then like, share and subscribe to ET Now.